Welcome to the Opening Bell Report.
It is Sunday, January 18th, 2026.
Hmm.
And if you're listening to this, you're probably, enjoying a bit of weekend downtime.
Try not to think about the portfolio.
Exactly. Staring at your coffee until the market's open tomorrow. But we have something on the desk today that suggests downtime is maybe the wrong word.
Yeah, I'd say alert is probably a better state of mind right now, especially if you're holding tech stocks.
Yeah.
Or even thinking about it.
We are diving into a high Regency analysis report from the Opening Bell Report. And when I say urgency, I mean the tone of this thing is it's practically vibrating.
It is.
The subject is a company that's been everywhere, Advanced Micro Devices AMD, and the headline claim in this analysis is not subtle. It says the run to $300 starts now.
It's a massive call. I mean, $300 is a huge psychological number. But what struck me about this analysis isn't just the target, it's the logic behind it.
The why now?
Exactly. It claims we're in a very specific and very fleeting window of opportunity.
That's what jumped out at me too. Usually these analyst notes are, they're looking 12 months out, they're slow. This report is basically screaming, the train is leaving the station.
The doors are closing.
Right. So our mission today is to unpack that. Why 300? Why right now? And what on earth happened last Friday that triggered this whole thing?
It really all comes down to a convergence. You've got the technicals, the chart colliding with the fundamentals.
The story.
The real world story, yeah.
Yeah.
It's the signal and the catalyst hitting at the exact same time.
Okay, let's start with the signal. Because if you just looked at the kicker on Friday, January 16th, you might have felt a little queasy.
Queasy is a polite way to put it, yeah.
Right. It opened strong around $234.30, and then it slipped. It dropped all the way down to a low of $228.86. Now, to the untrained eye, that looks like weakness. It looks like people are selling off.
And that's exactly what it's supposed to look like. The report identifies this move as a classic, a bear trap.
Okay, let's pause there. Bear trap. We hear that term all the time, but let's break it down. What's actually happening there?
So a bear trap is,
Yeah.
it's pure deception. It's psychological warfare on the chart.
Okay.
You have a stock that's in an uptrend, then boom, the price breaks down below a key level. It looks like the floor fell out.
And all the sellers, the bears, they pile in.
They jump in, they think, aha, the trend is broken. Time to short this thing.
They're chasing it down.
Exactly. But the trap is that there's no real selling pressure. It's often just big money, institutions shaking the tree.
So they can buy cheaper.
Right. And as soon as the bears commit, the price just snaps back up violently. And now they're trapped and they have to buy back their shares, which just adds more fuel to the fire going up.
So it's like pulling back a slingshot. You have to pull it down to get the energy to launch it.
That is the perfect analogy. And the report says Friday.
Hmm.
That was the pullback.
Okay, but how do we know it was a trap and not just, the stock actually being weak? Because watching that in real time, $228 must have felt like a crash.
You look at how it resolved. It didn't stay down. It hit that $228. It just bounced hard. It rallied all the way back to close at $231.83.
Up almost 2% for the day.
Yeah. And the report emphasizes that it's not the close that matters most. It's the low. It calls $228 critical support.
And support is basically a price floor, right?
Think of it like a floor made of concrete money. Every single time the price touches $228, buyers just flood in.
And the report uses that great phrase.
Smart money is loading the boat.
I love that. So while the regular folks might be panic selling, the big funds are backing up the truck.
It's a wealth transfer from the impatient to the patient. The fact that the price refused to stay down there tells you everything. The demand is huge.
So structurally, the chart is now coiled. It's ready.
Yeah, it's screaming that the path of least resistance is up.
Yeah.
We're sitting right under what the report calls the breakout zone.
Okay, so if $222 is the floor we just tested, where's the ceiling? What's the number we need to break through?
The report pins it at $235. We closed Friday around $232. So we're right there. We're knocking on the door.
And if we push through $235 with some real volume.
Then the report says we enter blue sky territory.
Blue sky, meaning there's not a lot of resistance overhead, not a lot of people waiting to sell.
Precisely. There's no historical baggage right above that level.
Yeah.
It can run, and it can run fast. It's like finally getting out of city traffic and onto the open highway.
So that's the signal. The bear trap, the floor holds, and now we're coiled. But a signal is just lines on a chart. You need a reason.
Right. Vibes don't pay the bills. You need earnings. You need growth.
Which brings us to the catalyst. The analysis points to one specific date, February 3rd, 2026.
D-Day.
D-Day. It's AMD's Q4 earnings release. Now, I have to play devil's advocate here.
For it.
Every company has earnings. Why is this report so critical? What are they expecting that's so different?
Because this isn't just a standard report. This is the show me the money moment for their entire AI strategy.
For the MI300 and new MI325 chips.
Exactly. You spent the last year hearing they're coming, they're coming. February 3rd is when we find out if they actually sold them.
So it's the shift from hype to actual revenue.
Correct. And the street's expectations are, well, they're huge. The report says they expect AMD to blow expectations out of the water. Revenue estimates are sitting at $9.25 billion.
Wow. 9.25 billion. That's a staggering number.
It is. And it's not just the top line number. It's the profit, the EPS, that's expected to surge. But here is the critical part, and this is where market psychology gets tricky. The report warns, don't miss the boat.
Right. But if the good news is on February 3rd, why can't I just wait, see if the numbers are good and then buy? That feels safer.
It feels safer, but it's almost always less profitable. By the time that headline hits, the trading bots and hedge funds have already moved the price.
It's the oldest saying on Wall Street, right?
Buy the rumor, sell the news. Or, in this case, the report says the move happens before the news.
So the buying we're seeing now, that bounce off $228, that is the move.
That is a market positioning itself. The smart money is placing its bets now. If you wait until the cards are face up on the table, the betting window is closed. You missed the easy money.
The premium you pay for waiting is the profit you missed out on.
That is a perfect way to put it. You're paying for certainty, and certainty is the most expensive thing you can buy in the market.
Okay, let's talk about that expense, because whenever we talk AI stocks, the word bubble comes up. I looked at AMD's valuation. The PE ratio is sitting at 114.
It's a big number.
A huge number. For anyone listening, a normal PE is maybe 20, 25. AMD is at 114. That means you're paying $114 for every $1 of profit. That sounds crazy expensive.
It does, and this is the most misunderstood part of growth investing, and the report tackles it head on. If you look at the trailing PE, what they did in the past, 114 is scary. It looks irrational. But the market is a forward-looking machine. It doesn't care about last year. It cares about 2026.
So we need to look at the forward PE.
Exactly. The forward PE is based on future estimates. And because AMD's AI revenue is expected to just explode, that earnings number gets a lot bigger.
So that 114 number, it comes down.
It doesn't just come down, it compresses. The report says when you factor in the 2026 guidance, that PE of 114 drops to around 40.
Wow. From 114 to 40, that's a massive difference.
It is. And all of a sudden, paying 40 times earnings for a company that's in a duopoly in the biggest tech revolution of our lifetime.
That's not expensive.
Some would even argue that's cheap. You're not paying for the AMD of today. You're prepaying for the much, much bigger AMD of tomorrow.
It's a growth story, pure and simple.
Precisely. And the report uses this great comparison that I think makes a lot of sense, the king versus prince analogy.
Right. NVIDIA is the king. I don't think anyone would argue with that.
No, they have the crown, the castle, the whole thing. But the market hates a monopoly, and customers really hate a monopoly.
Microsoft, Meta, all of them.
Yeah.
They need a second source.
They need a prince to keep the king honest. And AMD is the only other player that can actually compete in that high-end data center space.
So even if they just get the crumbs from NVIDIA's table,
those crumbs are worth billions and billions of dollars. It's the Pepsi to NVIDIA's Coke. You don't have to beat Coke to be a huge success.
You just have to be the clear number two.
And that valuation gap suggests the prince has a lot more room to grow.
Okay, so signal, catalyst, valuation. Let's get to the fun part, the numbers. The report lays out a specific roadmap to $300.
It does. It's a step-by-step approach.
Yep.
And step one is right in front of us.
Breaking $240.
Yes. The report says that could happen next week. That's the first mental hurdle.
But if we clear that,
then it becomes a straight shot to $267.
Why $267 specifically?
That's the 52-week high, the old peak. In technical analysis, price has a memory. It wants to go back and test that high water mark.
It's like a magnet.
It is. If you break $240, there's not much stopping it from floating right up to test $267.
And if we smash through the all-time high, if we break $267...
that is when the magnet gets turned up to full power. The report says $300 becomes the target.
And why $300? Is that a technical level or just humans liking round numbers?
It's largely psychology. But psychology drives markets, right?
True.
When a stock breaks into all-time highs, nobody's losing money. Everyone's in the green.
Yeah.
That creates euphoria. And these big round numbers like $300, they act like gravitational pulls.
It just feels like a destination.
It does. And the report notes some analysts have targets as high as $395, so $300 might just be a pit stop.
Wow. Okay, so the verdict is strong buy. But they did include a warning. Don't let the volatility scare you.
Stay long, stay strong.
Damn.
And this goes back to a chart pattern they mentioned. They say the chart is flagging.
Okay, can you explain flagging? Because to me, flagging sounds like getting tired.
Right. In normal English, yes. But in charting, it's actually a super bullish sign. So imagine a flagpole. That's the sharp run-up in price we saw. Then at the top, you get the flag. The price just drifts sideways, maybe slightly down. It looks boring.
Like it's losing steam.
But it's not. It's consolidating. It's digesting the gains. Think of it like a sprinter catching their breath before the next sprint.
It's the pause that refreshes.
Exactly. And the report says we are in the flag right now. The bear trap was the bottom of it. You do not sell in the flag. You wait for the breakout.
Okay, so to bring this all together for our listener, we have a stock, AMD, that has successfully defended a key level at $228.
Proving smart money is buying.
We have a massive earnings catalyst on February 3rd that could prove their AI strategy is working. And we have a valuation that looks high on the surface, but is actually pretty reasonable when you look at future growth.
That's the whole picture. The chart says go and the business model says grow.
And I think the takeaway here for everyone listening, for the learner, isn't just go buy AMD. We're not financial advisors.
Absolutely not. This is just analysis.
But it's learning to read these setups. It's understanding that when a stock dips but bounces hard, that's information.
Totally. And when earnings are coming and the price starts creeping up weeks in advance, that is also information.
Whether you trade the stock or not, watching how it behaves around $228 and leading up to a D-Day event like this, it's a masterclass in market psychology.
You're watching fear and greed play out in real time. And usually the one who panics the least wins.
That's the golden rule. But before we wrap, I want to leave our listeners with one final thought, a bit of a provocation.
Okay.
We talked about buying the rumor. The report is clear. The move happens before the news.
Right. Smart money is buying now.
But that raises a paradox in my mind. This is where trading gets cruel. If the smart play is to buy before the news, what happens on the news?
The classic sell the news phenomenon.
Exactly. If the report is right and all the smart money is loading the boat now, who is left to buy the stock on February 4th? If the earnings are amazing, $10 billion in revenue, but everyone who wanted to buy has already bought, does the price go down?
That is the ultimate contrarian risk. We see it happen all the time. A company reports record earnings and the stock drops 5% the next day. Why? Because the expectation was already priced in. There was no one left to bid it higher.
So D-Day on February 3rd, it could be the start of the run to $300, or it could be the moment the smart money hands their shares over to the people who waited for the headline.
That is the danger. The report is bullish on the run to $300. But whether $300 is a launch pad or a ceiling, that depends entirely on who's left on the sidelines on February 4th. It's a game of musical chairs.
A fascinating thought to leave you with. The run is on, but timing the exit is just as hard as timing the entry.
Indeed. Stay sharp out there.
That is all for this deep dive into AMD. We will be watching that ticker on Tuesday morning to see if $240 breaks. Thanks for listening.
Stay curious.
Don't forget to like, share, and subscribe for more.